Today we're diving into 5 buzzy investments: Bionexus Gene Lab, BGLC, ClearOne, CLRO, Inovio Pharmaceuticals, INO, Argo Blockchain, ARBK, and the crypto project Arpa Chain. We'll break down what they do, recent performance, and whether there's real opportunity or just hype. Remember, this isn't financial advice, just my analysis to help you start your own research. Let's get into it, starting with BGLC. And if you find this helpful, hit that like button. First up, Bionexus Gene Lab, BGLC, a micro-cap Malaysian biotech focused on health and wellness products. This company has been making waves in the local market, drawing attention from retail investors and industry watchers alike. Their direct-to-consumer model sounds promising, but it's a double-edged sword. Great for scaling quickly, but risky if the brand falters or fails to connect with customers. The pressure to maintain momentum is relentless, and one misstep can be costly. The stock is extremely volatile, often moving on hype rather than fundamentals. Price swings can be dramatic, sometimes triggered by rumors or speculative news rather than actual business performance. Retail speculation drives wild swings, making it a dangerous playground for the unprepared. Many jump in hoping for quick gains, but few are ready for the roller coaster ride that follows. Financials, inconsistent revenue, no clear path to profitability, and little institutional interest. The numbers just don't add up for a sustainable business at this stage. That's a red flag. Big funds avoid these for a reason. When the professionals stay away, it's usually a sign to dig deeper before committing your own money. The health and wellness market is crowded, and BGLC hasn't shown a unique edge or moat. With so many competitors, standing out is tough. Without a strong competitive advantage, it's hard to see them breaking out. Innovation and differentiation are key, but so far, BGLC hasn't delivered on either front. For me, the numbers don't justify the hype. There's a lot of excitement, but not enough substance to back it up. If you're looking for steady growth, this isn't it. The ride here is anything but smooth, and stability is nowhere in sight. The risk is sky high, and the reward is far from guaranteed. You could win big, but you could just as easily lose your shirt. Unless BGLC shows several quarters of real growth and a plan for profitability, it's more gamble than investment. Consistent results are what matter in the long run. Bottom line, BGLC is for high-risk traders, not long-term investors. If you're in it for the thrill, maybe it's your kind of play. The story is interesting, but the fundamentals just aren't there. A compelling narrative can only take a company so far. If you're tempted, tread carefully and don't get swept up by the hype. Emotional decisions rarely end well in markets like this. There are safer places for your money if you want to build wealth over time. Patience and prudence often pay off more than chasing the next big thing. For now, BGLC is a speculative bet, not a solid investment. Treat it as such and don't risk more than you can afford to lose. Watch for real progress before considering a position. Look for tangible improvements, not just promises or projections. Otherwise, you're just rolling the dice. In a market this unpredictable, luck is not a strategy. In this market, that's a dangerous game. The stakes are high and the risks are real. Always do your own research and know your risk tolerance. Don't rely solely on tips or trends. Make informed decisions. Let's move on to the next stock. Next up, ClearOne. ClearOne, CLRO, is a company specializing in conferencing and collaboration technology. Think high-quality microphones, advanced cameras, and AV gear that power today's remote and hybrid work environments. Their products are designed to make virtual meetings seamless, whether you're in a boardroom or working from home. In a world where remote work is now the norm, you'd expect a company like this to be thriving. The sector's booming with demand for collaboration tools at an all-time high, but CLRO's stock hasn't followed suit. Despite the industry tailwinds, the share price has lagged behind its peers. Why? Fierce competition from giants like Logitech, Cisco, and Poly makes it tough for smaller players to stand out or gain market share. ClearOne's financials reveal the challenge: stagnant revenue, persistent losses, and ongoing struggles with profitability. Growth has stalled, and the company hasn't been able to capitalize on the sector's momentum. In a rapidly growing market, that's a red flag. They're losing ground while competitors surge ahead. Legal battles, especially with Shure, have drained resources, distracted management, and created a cloud of uncertainty over the company's future. The outcome of these lawsuits could make or break the company, impacting both its finances and reputation in the industry. The bull case? ClearOne's patented technology could help them win lucrative contracts and potentially spark a dramatic turnaround if they can execute. But that's a big if, and the risks are huge. The company faces an uphill battle on multiple fronts. If they can't out-innovate the competition or resolve their legal issues, they risk fading into irrelevance as the market moves on. For investors, this is a classic turnaround play. High risk, high reward, but with a lot of uncertainty and volatility along the way. Personally, I'd need to see legal clarity, a resolution to the lawsuits, and real sustained revenue growth before getting interested in this stock. Until then, it's simply too speculative for most portfolios, especially for those who prefer stability. If you're looking for a safer tech play, there are plenty of better options with stronger fundamentals and less drama. For now, CRO is a stock to watch, not to own. Keep it on your radar, but don't rush in. Only consider it if you're comfortable with big risks, lots of unknowns, and the possibility of further downside. The potential is there, but so are the pitfalls. It's a bumpy road with no guaranteed payoff. Wait for clear, convincing signs of a turnaround before jumping in. Patience is key with a stock like this. Otherwise, you're betting on hope, not results, and that's rarely a winning strategy in the long run. In summary, great industry, but a tough road ahead for ClearOne. The challenges are real and shouldn't be underestimated. Most investors should stay on the sidelines and watch how things play out. Let's keep moving. Next up, Inovio Pharmaceuticals. The biotech gamble continues, and we'll see if it's any different. Remember, not every company in a hot sector is a winner. It pays to be selective and critical. Do your homework, dig into the details, and be patient. Good opportunities take time to reveal themselves. Let's see if Inovio offers a better risk-reward profile. On to the next. Inovio Pharmaceuticals, INO, is a clinical-stage biotech betting on DNA medicines for infectious diseases and cancer. Their COVID-19 vaccine hype faded fast after setbacks, and they're now pivoting to other treatments. Like most early-stage biotechs, they have no products on the market and burn cash on R&D. Success hinges on their drug pipeline. One breakthrough could send the stock soaring, but most candidates fail. The risk? Massive. Clinical trials are expensive and have high failure rates. If a key trial fails, the stock could crash overnight. INO's financials show ongoing losses and frequent share dilution to raise cash. Bulls believe in their DNA platform. Skeptics point to a history of over-promising and under-delivering. This is a pure speculative play, either a huge win or a near-total loss. Unless you're an expert in biotech and can analyze clinical data, you're betting on hope. For most investors, the risk is too high for a significant position. If you want to gamble, keep it small and expect volatility. Don't invest more than you can afford to lose. The science is exciting, but the odds are long. For most, it's best to watch from the sidelines. If you believe in their pipeline, do deep research before buying. Otherwise, steer clear of the biotech lottery. Let's move on to something completely different. Crypto mining. Next up, Argo blockchain. The volatility doesn't stop here. Let's see if ARBK offers a better risk reward. Argo blockchain, ticker symbol ARBK, is a Bitcoin mining company. Imagine massive data centers filled with specialized computers, all racing to solve complex math problems in order to earn new Bitcoin. These operations run 24/7, consuming huge amounts of energy and generating digital gold. Investing in ARBK is like making a leveraged bet on Bitcoin's price. When Bitcoin rises, RBK can soar even higher. But the risks are magnified too, and the swings can be dramatic. Their business model is straightforward: mine Bitcoin for less than it's worth on the open market. The biggest cost by far, electricity, which can make or break a mining operation. Cheap, reliable power is everything. Without it, profits disappear fast, and competition is fierce for the lowest energy rates. Argo's Texas facility aims to use renewables like wind and solar, which helps with costs and sustainability. But even with green energy, the business is still at the mercy of unpredictable crypto cycles. When Bitcoin soars, miners can practically print money, seeing profits multiply as the price climbs. But when Bitcoin crashes, those profits can evaporate overnight, leaving miners scrambling to cover costs. Argo's financials swing wildly from quarter to quarter, and they carry significant debt from rapid expansion, making them vulnerable during downturns. The recent Bitcoin halving slashed mining rewards in half, so only the most efficient miners with the best technology and lowest costs can survive in the long run. Argo even had to sell its flagship facility just to stay afloat. A major red flag for investors, and a sign of how tough the industry can be. If you're bullish on Bitcoin, ARBK offers the potential for amplified returns. But remember, the risk is amplified too. You face not just Bitcoin price risk, but also operational risk, debt risk, and industry-wide risk from events like halvings and regulatory changes. For most investors, buying Bitcoin directly is simpler, more transparent, and less risky than owning a mining stock. ARBK is for those seeking high-stakes exposure and who can stomach extreme volatility and uncertainty in the crypto sector. If you want to play the mining game, know the risks, do your homework, and size your position accordingly to avoid outsized losses. Otherwise, stick to the underlying asset, Bitcoin itself, for a more straightforward investment. Crypto mining stocks are not for the faint of heart. They're a roller coaster ride, and you need a strong stomach to hold on. Now let's wrap up this segment with a look at a different kind of crypto project, Arpa chain, which brings its own unique approach to blockchain. The risk profile stays high, but the story and technology behind each project can be very different. Let's see if Arpa offers something different for investors and the crypto community. On to the final pick. One last project to consider in this fast-moving space. Crypto, but with a twist. Let's break it down and see what sets it apart. Here's what you need to know before diving in. Arpa chain is a blockchain project focused on privacy-preserving computation. It uses multi-party computation, MPC, to let multiple parties compute data together without revealing private info. The goal enables secure data sharing for finance, healthcare, and more, without sacrificing privacy. The RPA token powers the network, paying for computation and governance. The big opportunity? If privacy becomes a key Web3 need, Arpa could be huge. But competition is fierce. Other projects like Secret Network and Oasis are in the race. Adoption is everything. The best tech is useless if nobody uses it. Arpa's team is active, but real-world traction is still developing. Like all altcoins, Arpa is extremely volatile and tied to overall crypto sentiment. The risk of going to zero is real, but so is the potential for massive returns. If you understand the tech and believe in privacy as a Web3 pillar, Arpa is a high-risk, high-reward bet. For most, it's a speculative play. Don't invest more than you can lose. Watch for partnerships, developer activity, and real adoption. If those materialize, Arpa could break out. Otherwise, it's just another altcoin gamble. Only for the crypto-savvy willing to take big risks. Do your homework before jumping in. Let's wrap up with some final thoughts. What should you do next? Here's my take. Each of these picks, BGLC, CLRO, INO, ARBK, and Arpa, offers big upside and even bigger risks. These aren't safe, blue-chip plays, they're speculative bets where fortunes can be made or lost fast. Always do your own research and never invest more than you can afford to lose. My analysis is just a starting point. Dig deeper before making any moves. Are you in any of these? Agree or disagree? Drop your thoughts in the comments. If you found this valuable, hit like and subscribe for more deep dives. Thanks for watching. See you next time.